Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 6, 2019. We had a relatively short week because of a 4th of July holiday, and then the day before that was a shortened day, so not that much price action, but quite a bit still did happen. So we'll cover stocks. Some of the funds are breaking to record highs and 52-week highs as well. For example, solar versus energy, which is underperforming. We'll look at bonds and the treasury yield curve once again. I don't really like this action, but it's not the end of the world yet. Natural gas may be showing some signs of life. Oil is approaching good levels to short. And we will also look at gold, which may not be done correcting. Dollar, again, interesting price action. We'll look at that. So not yet ready to call dollar turnaround, obviously, to the downside. And we'll finish off with correction for cryptos not yet over. Please don't forget to hit the like button and subscribe to this channel. Okay, let's look at S&P 500, Etf Spy. These are record highs on Thursday, or rather Wednesday, on the July 3rd. So really good news, I think. I keep saying the same thing. This is a bullish chart. The breakout, there's the breakout on February 4th, and it just continues higher. Any pullback, I think, should be used as a buying opportunity. Here's one such opportunity on QQQ. On Dow Jones, DIA. We went ahead and took some of the opportunities here at MasterCharts Trading. So this was one of them right there on 28th of May. We sent an alert, and you have a beautiful, nice move, very easy decision. There's no thinking really involved. Again, I'm using my own indicators. If you don't yet know, sign up for to get more information about them. You can also chat with me on TradingView. If you have a TradingView account, you can actually open a free TradingView account, so you can chat with me right there where I'm hovering, and get this price action indicators so that they can be displayed on your chart as well. Very easy to trade with them. Here's QQQ, and these are indeed new all-time record highs right there, again on Wednesday. So this is showing really good appetite for risk. When we get to bonds, I am a little concerned, but overall, let's trade the chart in front of us and not worry about too much about macroeconomic picture. Overall, when I worry too much and I think about many different inputs, I start to lose track of the actual trading. And here on the actual chart, if we just do nothing else, there's really information is presented in form of a graph of price, and that's why I'm using the indicators to show me where, at which levels there are good opportunities. And this blue line is an excellent opportunity for buying a bullish security such as QQQ. Several stock funds broke out to record highs. Here's another one, XLF. Let me copy this so that I can put it there as well. So XLF financials are breaking to record highs. This is good news. This is an offensive sector, and it is showing that the economy is in generally good health, in a generally good health right now. So financials, also consumer discretionary at record highs. Again, consumer discretionary are just as economically sensitive as they get, and we should definitely be looking at this chart from the point of view of buying it, not from the point of view of where would it top out. We don't know where it's going to top out. It could continue higher indefinitely. A trend is a trend until it no longer is a trend. XLK, also very similar in composition to QQQ, but again also a good sign that it is breaking to highs, to fresh highs, because this is very much an offensive sector, in the sense of investors would want to be buying this particular sector when the economy is in good shape. XLP, a little bit of a more staples, in other words, stocks like Clorox are in here, but notice that it is also at record highs, and I keep saying the same thing over and over. Stocks correlate highly to other stocks. Some of the other sectors that are actually underperforming are the energy, XLE, and you can see that compared to, for example, to XLP, where it's at record highs, XLE is basically flat and kind of down towards the red line. It never actually broke out. You can see that energy went into a bear market back here in October of 2018, and there was really no breakout like we saw with S&P 500, and it's just kind of trading down here. When or if it breaks above the blue line, then we'll consider buying it. For comparison, very interesting, you can see that solar, this is solar ETF 10. This one broke out together with most of the stock market here in February, and notice this up arrows, which are actual alerts to the subscribers of MasterChartsTrading.com, and notice now we're at 52-week highs. So again, the way I trade is attractive to many traders because of the simplicity of it. It's just very straightforward. We look for a close above the blue, we simply buy there, and then we sit. And notice, the longer we sit, the better. So that's 23% gain right there on solar ETF. Okay, let's switch gears a little bit. Let's look at bonds. Here's the junk bonds, and junk bonds and stocks, I keep saying the same thing, they correlate highly to one another. In other words, junk debt and stocks move together in lockstep. Notice this 52-week highs, and I keep showing S&P 500 also at 52-week highs, or rather even all-time highs. LQD, also known as investment-grade corporate bonds, had an enormous move. Again, the reason I keep saying the word enormous is because bonds don't really move as much. In this case, they moved a lot. 7% gain right there from the breakout level on 31st of January, actually, of this year. It's at record, rather 52-week highs. I think it's overextended. I mean, I think already the pullback has begun. It just looks really overextended. I think we'll see a few weeks to a few months of correcting action, which could be just sideways trading, maybe a little bit of a pullback. Right this instant, I would not be buying this. I would be, closing or lightening up my position. If I entered back here, I would definitely be taking some profits by now. Let's look at bonds now, the investment grade bonds, the treasuries. So let me show you the, excuse me. There it is. Let me show you the dynamic yield curve again. So what does that show? What is a dynamic yield curve? Dynamic yield curve just means that here, this is the yield curve. We have the 3 months treasury bills, 2-year bills, 5-year bonds, 7-year bonds, 10-year bonds, 20-year bonds, 30-year bond, treasury bonds. So all of those are treasuries. and it's showing the yield. You can see that the yield on a, and I'm looking this up right now, 3 months treasury bill yield is 2%. So you can lend the money at 2.1% for 3 months and basically get all your money back. A 10-year treasury yield will actually yield less. It will only yield 2.04%. Do you see the problem? You will wait 10 years to get less than at 3 months if you lend it at 3 months. And at 20 years, you will get 2.3%, which is just marginally higher than a 3 months yield. So this is the reason why I'm worried about this, is because you can see that basically at 20 years, you almost yielding the same as 3 months. And right now the 30 year is the final holdout. If that drops below the 3 months yield, that would be the actual yield curve inversion. For example, as I keep showing, before the market crashes of 2007 and 2000, you can see a yield curve inversion where I'm hovering. You can see that the yield on the 3 months was higher than the yield on the 30 year. And the same goes, for example, right there. Yield on the 3 months in the year 2000 was actually higher than the yield on the 30 year. It is coming to that right now, and this is what worries me. So if what I'm afraid of is that Federal Reserve will wait a little too long and we will get an event. I know that it sounds weird, but like, this is what I'm trying to say, is that there was an inversion event. Later on, you can see that they lowered the interest rate, but they didn't save the stock market. So what I'm afraid of, they're going to let the yield curve invert and then lower the interest rate. And then that could be a problem, because I think at that point we might be a little too late. So here's that 52-week high. Notice that actually this is my trade on TLT. I sent an alert and I entered myself on the 11th of January. There was another alert to my subscribers on 4th of March. So this one I kind of let ride, and I sold a quarter, sold another quarter, and I sold another quarter. So I have a quarter of the position which is up significantly. Now, some people would say that, Alex, why are you taking profits? I've seen way too many positions that you have a profit and all of a sudden you don't have a profit. So take your profits. That's what if I can call it advice, that's my advice. Intermediate term bonds, IAF alert was also sent in 24th of December here actually, and again, very nice move, 52-week highs again. Overextended, but if the investors are bidding up prices, there's a reason for it. I don't know the reason. I'm a technician. I trade in technicals. Here goes short-term bonds. BSV also notice big push higher, so that is weighing on the yields as well, and the yields are dropping. So the short-term yields either need to drop or the long-term yields need to go higher to prevent the inversion of the yield curve. Natural gas. Let's briefly look at natural gas. Not much is happening. The latest alerts, which were actually to the downside, to short, were back in December and in January, and this latest alert, you actually got 36% gain. So again, congratulations. Right this instant, it's possible that it's showing some signs of life. Natural gas, I think, may have bottomed here on 20th of June. But overall, I still think it's a bearish security, and I think I would short it around $3. 3.1 actually. You see right there, 3.2 maybe. Okay, so here's oil. I think this is a bearish chart. I want to be selling it, shorting it, so perhaps when we see a close below this red line. Okay, let's continue to gold. Here's XAU USD. So it feels like the correction is not yet over. We got a couple of rejection candles right there, one on 25th of June, another one on the 3rd of July. It feels like there's rejection up in this area. I think we need to see a pullback of some sort, because this is a very nice big move, and I think it's overextended. So a pullback, and actually if we see a pullback towards 1334 for gold, that would make for a nice buying opportunity. Here's GDX, gold miners, picture perfect trade. I actually entered myself on the 31st of May, and it just went in my favor immediately. I sold already half in various places, sold a quarter and a quarter. May sell some more if we see a pullback further. Dollar index not still, I mean, despite noise again, even further narrowing of a trading range just a few days ago. So right this instant, still no turnaround for the dollar. I don't see a breakdown. I see the opposite. I see a close above the blue and a follow through to the upside. So right this instant, I would be very careful with Forex. Euro versus US dollar. I showed this to my subscribers already, and notice that where did resistance come in? Right there at the red line. Trading around the red line, nice big selling, another follow through. So if you were selling it here, shorting it here around the red line at 1.37, then you're in great shape already. I was still watching for a breakout, so I wasn't really trading it to the downside. And British pound, a lesson in why we must honor our stops. So myself, I opened the position right there. On 3rd of May, it went against me immediately. I got stopped out a few days later, which is where I wanted to be stopped out, basically. And then continued lower and lower, and notice another low. So this is why we must, as traders, really just get out of the losing trades. Here's Bitcoin. So Bitcoin, this bearish engulfing pattern, I'm gonna zoom into it, it's kind of hard to see. I actually pointed it out a few weeks ago as well. So bearish engulfing pattern is these two candles, one from 26th of June, one from 27th of June. You can see the not only it's a bearish engulfing, there is also a element of rejection up here in the 1370 1400 area, and then the bearish engulfing. How did it work? We had an open about where the close was on the 26th of June, and then throughout the day, basically, there was preponderance of selling. You can see the real body of the candle is engulfed by the real body of the red candle. Real body of the green candle is engulfed by a real body of the red candle. And I mean, real body is this part, not the tails out of the top or the bottom. This is a bearish engulfing, and you can see a follow through to the downside. I don't think this correction is yet done. I think that cryptos are still going to need to do a little bit more correction, because this is a 100% move. From from the bottom there, it's probably over 100% move, but the way I'm looking at it, this is a new bull market in Bitcoin. Here it started around 6/7 of May 2019, and this is actually over 100% move. So yes, correction of some sort is definitely necessary. Litecoin, very similar pattern. It started correcting even earlier than Bitcoin. Still, it's kind of getting there the way I eyeball it, but I think ideally I would like to see a pullback towards 100. Finally, Ethereum, very similar but even more pronounced bearish engulfing with a shooting star candlestick right there on the 26th of June. So you got bearish engulfing 26.27 and then a pullback. Again, I don't think the correction is yet over. I would wait for a pullback towards 258 for Ethereum. That's it for today's recap. Please head over to MasterCharts Trading, click on sign up, and then select one of the plans. Now, all of our plans come with free 30-day trial, so you will not be charged anything for the first 30 days. You can try out the alerts, you can try out my indicators. I'm talking about the indicators that are showing throughout the presentation. This green, blue, red, and yellow line, which help you tremendously, I think, to visualize price action and also to place stops and also to determine trend. So if you want just the alerts, then you can select that, and I will send things like this. For example, one on 13th of May here for Ethereum. This was an actual alert, and some subscribers probably took it, I'm hoping. And then trading indicators. This is the actual indicators, so you can have these indicators on your chart. All you have to do is open a free TradingView account. You do not need to pay for the TradingView account. And finally, if you want to have both the alerts and indicators, and many professional and semi-professional traders that are subscribed to my services prefer to have both, I think it's helpful because you can not only trade on your own, but also to get my ideas as well. Alright, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching and have another great trading week. Bye-bye.